Welcome everyone to today's webinar, the first in our series on tax relief for the creative industries in partnership with Valorem. My name is Nicole Stewart-Rushworth. I'm the Enterprise and Commercialisation Lead Producer at CoSTAR National Lab. Today we are joined by Suzanne Clements and Michaela Randall from Valorem, who will be taking you through today's session. There'll be an opportunity to dig into any questions that you have after the presentations. Thank you all so much for joining. Suzanne and Michaela, over to you.
Afternoon, everyone. I hope you're all well. I'm Michaela. I'm probably one of the least members of technical team in Valorem. My role is partnerships, and I work with CoSTAR and other industry professionals working out how can we support their clients. So if I may, I'll give you a bit of a light background into Valorem. We're an accounts practice that's established for 25 years. We do general compliance, but a big area of our expertise sits with the R&D Tax team, which is headed up by Suzanne Clements, who will do a formal introduction in a moment. This afternoon, we're looking forward to taking you through a real light touch on what R&D tax credits is, why it's important to utilise and how it can be seen in the creative industries, key things to consider, common misunderstandings, which there are several, and early indicators of when to use a professional provider of the R&D tax credit services, as a report is required, which Suzanne will take you through in more detail. I've already given my brief introduction about myself and my relationship within the role of Valorem, but as mentioned, it's more about external relationships. So if anyone needs anything, I would be your first point of call. Suzanne Clements, Head of R&D, is going to take you through the rest of the presentation.
Hello everyone, thanks very much for coming along. My name's Suzanne Clements. I'm Head of R&D at Valorem Lumina. My team specialises in R&D tax credits within the broader accountancy practice. I'm a former HMRC inspector. I spent many years working on a specialist unit for R&D tax credits. An essential part of my role at Valorem is to ensure that R&D claims are compiled and evidenced in a robust, compliant manner. And this is to satisfy HMRC's demanding requirements in this area. As such, I carry out quality assurance on all claims, along with my colleague, our Q&A and technical policy manager, Lisa Waller, who is a fully trained accountant with a lot of R&D expertise. You'll be meeting Lisa later in the series because she also looks after our patent box and other creative reliefs specialisms. Next slide, please, Nicole. So the UK R&D tax incentives exist to promote innovation within the UK economy. It's basically a policy. Sorry, I can hear something in the background. This is slide 5. So the reliefs are there to encourage companies to invest in scientific and technological advancement. Investment obviously means growth, job creation, and the promotion of the UK as a centre for expertise and innovation. So where companies are investing money into creating new products or improving the way something's done, they should take advantage of the R&D scheme's benefits. This applies to all industries where technology plays a role, where people are meeting technological challenges by trying to make changes. And that, of course, includes the creative industries. So we're looking for projects that are seeking an advance in science or technology. And this can often be the case in creative industries projects. Were you making technological changes to come up with a process, a product or a service that goes beyond or improves on what was there before? And that extends capability, even if that's in a very niche area. It doesn't matter how specific it is. So the government's very aware that creative industries firms undertake R&D and innovate. There was a report published a few years ago by the Department for Culture, Media and Sport, And that surveyed respondents across 9 creative industry subsectors. And it showed that 51% of them had introduced new or significantly improved products or services, and over a quarter had introduced services or products that were completely new to the market. There are high levels of research and development among creative industries firms. The most common constraint that was mentioned on R&D and innovation activity was the cost of development being too high and the availability of finance. So the R&D schemes are there. They can have a significant impact on a company's tax position, and in some cases they can produce an actual credit payment. So it's really important that that's built into your thinking about how to support your projects. At the time of that survey I mentioned, the take-up of the R&D tax credit schemes was less than 10% among creative industries. And these industries do perform R&D, but they tend not to have a specific R&D budget or really have R&D tax credits on their radar. And even where they are highly active in R&D, those activities might not be recognised as such by the people undertaking them. Slide 6, please. So how does it work? For accounting periods that start on or after the 1st of April 2024, the legacy SME and RDEC schemes that you might have heard of no longer apply, and the merged RDEC scheme is introduced for most claimant companies. This is the biggest change in the R&D legislation in recent years. It's intended to simplify the R&D tax framework by consolidating those existing reliefs. The RDEC credit is delivered above the line. It's taxable. So the net benefit will depend on the taxable profits of the company and whether you're paying tax at the main tax rate or the small profits rate. The company's qualifying R&D expenditure for that period is multiplied by the RDEC rate, which is 20% at the moment, to give the gross RDEC for the period. That's accounted for as trading income, but it can then be used to discharge all or part of your CT liability for the period. And then an amount net of a notional tax deduction can be used against your CT liabilities for another period or surrendered to another group company, or it can be used to discharge your VAT and pay-as-you-earn liabilities, or claimed as a payable credit. Next slide, please. So the concept of an SME still exists for R&D. The Enhanced R&D Intensive Support Scheme, or ERIS, was introduced, and that runs alongside the merged scheme, and it offers more generous relief in line with what used to be the SME scheme. So, but it's worth remembering that the circumstances in which that relief can be claimed are a bit stricter. They're subject to new R&D intensity criteria. Your company has to be loss-making, and your R&D expenditure has to be at least 30% of your total expenditure for the year. Those thresholds apply to the company results as amalgamated with connected companies. So if they're controlled by the same person or group of people. So we need to look wider than the company itself in some circumstances to check that eligibility. The calculation's the same as the old SME scheme. There's an additional deduction based on your expenditure brought into account to calculate the tax-adjusted trade loss. And there's an optional loss surrender for a payable tax credit. So what costs can you claim? Well, staffing costs for the people involved in the R&D, that's wages, Class 1 NIC paid by the company, pension contributions, reimbursed expenses. So these sort of interdisciplinary teams are common in innovative projects, and staff costs for individuals with artistic or creative expertise can still qualify where their work contributes to an advance through resolving scientific or technological uncertainty. So not everyone on the team has to be an expert from a technological perspective. We look at the entire project team when we're looking for the staff costs, and that's including supporting staff. There are some exceptions. Sales and marketing, legal roles are unlikely to qualify, but you might be surprised how many people do qualify. You can also claim for externally provided workers as long as the staff providers operating UK pay-as-you-earn for them, and contractor costs if that R&D activity is happening in the UK. You can claim for software used in the R&D, data sets, cloud computing, hosting costs, and we would apportion those costs for the levels of R&D activity. You can claim for water, fuel and power under the consumables heading. And again, we'd apportion that depending on the facility, how many staff are involved in the R&D, any other items as well that are actually used up or transformed in the R&D process, such as parts for prototypes. So there's rules around these expenses, and they do have to be apportioned on a project-by-project basis. There can be some work involved to compile those costs from the company's records, but it may be worth it. Slide 8, please, Nicole. So the definition of a project, it's a number of activities conducted to a method or plans in order to achieve an advance in science or technology. We have to get the project boundaries right. We're trying to identify all the activities which actually served to address whatever technological uncertainty was associated with achieving the advance. So we look to see when the uncertainty was identified and when it was resolved, or when the company gave up trying and abandoned their efforts, because failed projects can qualify too. That gives us the outline. When we're thinking about pinpointing that uncertainty, our starting point is to understand the level of knowledge or capability that existed at the time the project started. The intention might be to develop new knowledge or capability in a particular area, so we need to describe what was already known, what the industry was already capable of doing. And if the intention was to improve something, an existing product or a process, we need to describe what those existing features and capabilities were. When we understand the background to a project and how it came about, we'll be able to judge if an advance was being sought relative to that existing state of capability. So we're looking at the current state of the industry. What were the current technologies and methods being used to do this? What will the project change? And this is where we think about the concept of a competent professional. If somebody who understands that current state of the technology can't come up with a solution easily just by using their expertise and any information that's publicly available, it's likely that an advance was being sought. If you have to go through a process of trial and error, if you have to experiment, test things, find out from the process how to do something, it's likely that your project qualifies. That competent professional role is very important. So this has to be someone ideally on the project team who has a track record in that field of technology and the relevant expertise. So we need to reference at least one person like that. But like I said, not everyone on the team has to be an expert. And so we have to explain what we're trying to achieve relative to the state of capability at the time and show there was real uncertainty about how you were going to do it. Slide 9, please. So this is an example that HMRC has come up with for the film industry. So I'll just run through it. So this is all about virtual costume simulation. So a film studio is trying to develop a system to preview complex garments on digital doubles in real time. They want a realistic garment movement and texture that supports their vision of how this should look. So they need to make some advances to make that cloth behave realistically under dynamic lighting and motion constraints on the consumer grade hardware that they're using. So the advances there would be, trying to create these new methods for simulating that multi-layer cloth, developing techniques to render those textures and the lighting effects on standard devices. The uncertainties there are how to keep that cloth simulation stable and accurate when the layers interact, how to achieve that realistic lighting and sheen without exceeding performance limits. So obviously there's a constraint there that we're having to work within. Slide 10, please. So we're looking at the activities involved. So here, developing those systems and methods to generate the realistic fabric textures, solving the associated problems, assembling prototypes and testing those qualify. But expenditure on purely aesthetic or stylistic decisions that don't actually address any uncertainty, that technological uncertainty, that's not qualifying. So another example could be where a company's building an interactive experience where fans can virtually drive cars during live races on mobile devices. They want an immersive experience that feels authentic to live racing. They might be trying to resolve uncertainties such as how to keep visuals stable when the network data is noisy or there are delays, how to render those realistic surfaces within strict power budgets. So creating those methods to make visuals behave realistically under those strict performance limits would qualify. Developing new methods to achieve realism under constraints qualifies. So these are advances in capability. Solving problems to keep graphics smooth where devices and networks cause delays could also qualify. But choosing colour schemes or layout just for aesthetic appeal wouldn't, because that's just existing knowledge without technological changes. Slide 11, please. So when you make a claim for R&D tax credits, we evidence that in 2 reports. The technical narrative explains the project and it demonstrates that it was seeking an advance as defined in the guidelines. These are the guidelines produced by the Department for Science, Innovation and Technology. That's the statute that defines R&D for tax purposes. So it's not enough just to explain the work. We have to put that together in a way that shows that the project's hitting those relevant criteria. We explain the trajectory of that work, and if there were failures along the way, that just goes to show how uncertain it was. Putting this together it's an interactive process. It's based on speaking with the people at the project's coalface. The second report details the qualifying expenditure for that accounting period. It shows how that's been arrived at, and that flows into the tax calculation. So we build up a picture of those costs to sit alongside the explanation of the work. And we carry out a detailed due diligence process to make sure that everything that goes into the claim is transparent, fully defensible in terms of the legislation. Slide 12, please. So there are a few things to bear in mind. Size doesn't matter. There's no minimum or maximum spend to claim the R&D reliefs. It doesn't matter if your project's unsuccessful. In fact, if your experienced professionals have tried to achieve something and failed, that's evidence that there was genuine technological uncertainty. Not everyone on the team has to be an expert in the technology. Many supporting roles also qualify, but you do need at least one competent professional who can speak to the baseline at the start of the project and explain why a solution was uncertain. You don't have to have a patent or have protected your intellectual property. However, if you do have patents, we're able to support you with the Patent Box scheme, which reduces the tax paid on income derived from patented inventions. And later in the series, my colleague Lisa can talk about that. Unlike the legacy R&D schemes, for both ERIS and RDEC, there's no problem with subsidised expenditure. It doesn't matter if you get a grant for the project as well. For both schemes, there's a pay-as-you-earn cap, which may limit the credit you get back in your hand if you have no payroll or low payroll, but there are still ways to use those parts that you can't actually claim as a tax credit. A claim's made for an accounting period in your CT return. Projects can span multiple accounting periods, so claims can be made in several periods for the same project. As long as you are still trying to resolve technological uncertainty, there's no real time limit. There are other reliefs for creative industries, such as audio-visual expenditure credit, video games expenditure credit. We can also advise on those. Again, they're a topic for a future webinar. However, you should consider R&D tax relief first, because if your project qualifies for R&D tax credit, it must be claimed under R&D tax relief, even if it also meets the criteria for film tax relief, AVEC or VJEC. Basically, if you can claim R&D, that is what you claim, because there can't be overlap with other creative reliefs. Slide 13, please. So this slide with all the figures is very broad brush, and it's just to give you an idea of how the schemes compare and interact with whether you're profit making or loss making. It assumes the main tax rate for profit making companies, so 25%, and it assumes that the loss for the year for the loss makers is at least equal to the qualifying expenditure for ERIS. Obviously, we look at the tax position for a particular company. When we've compiled the expenditure, we'll have a much clearer picture of the benefit for a particular case. But if, for example, you're a profit-making company claiming under the merge scheme, before the claim, your tax calculation shows you made, say, £500,000 profit. We identify 400,000 of your expenditure in the year as qualifying R&D. That might be staff costs on time spent trying to achieve something. It might be external workers you've brought in, or contractors you've engaged, software you needed to use, consumable items that have been used up in the R&D process. RDEC is applied to that 400k at 20%. In the calculation, that increases your taxable profit, but it's then offset against the CT liability. So in this example, the CT liability falls from 125k to 65k, meaning a tax benefit of 60,000 in corporation tax savings, which is 15% of your expenditure on R&D. Looking at loss makers, if instead that £500,000 profit was a £500,000 loss to start with, so you had no CT liability to begin with, then adding back that RDEC at 20% reduces the loss by 80k. But the amount of the RDEC less notional tax at 19% can be claimed back as a repayable credit of £64,800, which is 16.2% of that 400k R&D expenditure. Coming to ERIS, if a company is, say, a singleton R&D intensive SME, and that makes that same trade loss of 500,000, it claims an additional 86% deduction of £344,000 on its qualifying expenditure, that same 400k, to give an increased trade loss of 844,000. So this mechanism is very close to the old SME scheme. It can then potentially surrender 744,000, which is the original expenditure plus that additional 86% deduction, for a payable tax credit at 14.5%, with a value of £107,880, which is 26.97% of the R&D expenditure. So you can see ERIS is more generous. Slide 14, please. So we come across some common reasons people might have for not exploring R&D tax credits. We're not a technology company. You might be a design company, or a film or a TV company, or in media or music or the performing arts. Technology might not be your raison d'etre, but if you're pushing your creativity to stay ahead of the competition by doing something better or differently, and to achieve that, you're trying to create or change technological tools or adapt technology to a new requirement, it's worth exploring that. You need to have a patent. That's not a requirement, as we've said. The project worked in the end. Well, that's great, but how much trial and error did it take, even though you had an expert on the case? We only need to provide finance information. Well, the days are gone when an R&D claim was just figures on a CT 600. HMRC expects to see facts and figures behind that. But if you're putting time into grant applications, for instance, consider putting time into an R&D claim. It is a process, there is some time investment, but it could be well worth it. Any innovation qualifies. Well, no, our Bible, if you like, is that statute defining R&D for tax purposes, the DCIT guidelines, and they explain that just seeking the advance, it's not the whole story. There has to be genuine technological uncertainty, which an expert can't simply resolve without going through a process of trial and testing, that's important too. A claim is simply a tax calculation. There's a bit more to it than that. Asking the government to give you money means putting a claim together that withstands scrutiny. Slide 15, please, sorry. So an R&D claim it's not just a narrative alongside a schedule of qualifying costs. Today, claims often involve a combination of technical interpretation, financial analysis, and regulatory considerations. Changes in the legislation, rates, reporting requirements, and the qualifying criteria all need to be considered. There has been a bit of a history hinterland to getting to the point of the merged scheme, and some of those factors may still be in play. But at the same time, HMRC's expectations around claim quality have become more detailed. There's greater emphasis now on clarity, consistency, and supporting evidence. But this doesn't mean that businesses should be discouraged from claiming their legitimate reliefs. Far from it. R&D tax relief remains an important government incentive. It's designed to encourage innovation and investment in the UK. It simply means that businesses benefit from working with advisors who understand both the technical and the compliance aspects of that process. The most qualified team to assess and structure R&D claims is able to integrate financial and regulatory expertise with hands-on technological experience. So that combination of both perspectives is really helpful to ensure compliant, substantiated and proportionate outcomes. Ad Valorem's team combines individuals with HMRC, accountancy tax professionalism, entrepreneurial experience, and strong technological expertise to inform our advisory work. Slide 16, please. So creativity and technology are both constantly moving. Examples of convergent technologies that are already changing the entertainment industry can be seen in the popular ABBA Voyage experience, which blends digital avatars with live performance in a specially designed arena, which had a 65 million pixel screen. Artificial intelligence is unlocking new opportunities in film and TV. The nature of video games is evolving, and how that content's being served to consumers. That includes the growing fusion of creativity, art and technology, using cutting-edge techniques to develop new games and bring new products to market. For example, BrainSpark Games is a multi-award-winning edtech gaming startup which develops immersive educational mobile games aligned with the key stages of the UK national curriculum. Unreal Engine is now considered to be the world's most open and advanced 3D engine technology, but that was first released in 1998. It's now being used for virtual production in the film and TV industry to enable remote filming locations and complex set designs, different camera angles. And that's allowed pre-production teams to conceive and plan in spaces they couldn't really enter previously. It's not all about film and gaming. Museums and galleries apply science and technology to the cultural heritage. For example, digitizing cultural assets and making them able to be used together. Towards a national collection is a 5-year multi-million-pound investment in the UK's museums, archives, libraries, funded through UCRI. You may be in media or publishing. You may be a tech or a software company supporting the creative industries. We have clients doing so many interesting things. For example, engineering client designing specialist lighting for film studios. We have a client in the music industry designing a silent practice tool for wind instruments. There's so much cross-fertilization going on. Your project might be taking a technology that was developed for something else entirely and adapting it for a new context. The question is, are you trying to do something new, make something better, or do the same thing in a fundamentally different way? And is technology involved in that? It's not just about buying in technology that's already out there or making routine tweaks. It's about pushing the technological boundaries of your tools to serve your creative ideas or meet the demands of a continually evolving field. So if there's any industry where that happens, it's got to be the creative industries. So are there any questions, please?
Thank you, Suzanne and Michaela. It was really interesting, and I know I certainly learned a lot. What we'll do is, if anyone has any questions, we can take them either in the Q&A or feel free to pop your hand up, and we will do Q&A on microphone as well.
Thanks, Suzanne. That was such a great insight. I think there's an awful lot to take on, and particularly from an audience listening in, if it's the first time you've heard about R&D, there's a lot to absorb in that. But anything we can always regroup on after the call, particularly the number side, financials, it's an important part, but it can be a lot to get your head round. And the good thing about using a regulated or a trusted provider in R&D is they'll do that bit for you. So they'll take the heavy lifting away and break it down and give you what you need to know. And I think that's the whole message about today in R&D tax credits. We can give you so much information because it's a really complex area of tax, but you don't need to know it all. All you need to know is what you're doing, and we will make it, if it's appropriate, into the right report to fit the criteria that the revenue have set and keep us all nice and in good working order and regulated.
Absolutely, Michaela. We are here to do the heavy lifting. This is our bread and butter. This is what we do. So you've got time to do what you do best.
Excellent. Any questions from anyone? Maybe I feel like everyone has probably gone, you explained it perfectly, and
your soothing voice, Suzanne, it's taken everyone into a lull with the soothing tones. Well, details are on the screen, and obviously feel free to connect on LinkedIn with myself if you've got any follow-up questions. More than happy to answer. My role, as I said at the very beginning, it's non-technical in the point of view of I'm not an accountant despite being in an accounts practice, but my role is very much the first conversation for R&D tax credits and any other business needs that you might have, and understanding where we fit and how we can assist and support. And it's always great to learn about new businesses and enterprises and what you guys are up to with CoSTAR.
Absolutely. And I hope you'll join us for the follow-up webinars where my colleague Lisa Waller will be involved as well to explain a bit more about other creative reliefs, and we look forward to seeing you there.
Absolutely. So the next webinar is in 2 weeks' time on the 12th of August at the same time as today, and then again 2 weeks after that. So please do join us then. If you do have any questions, you have our contact details. And yeah, thank you all so much for joining. And thank you again to Suzanne and Michaela for taking us through today's session. Thank you very much.